grateful to be back again at this conference. A lot has changed over the last year or two since I've been presenting about the opportunities in gold and silver. So interested to really talk about what's happening in both these precious metals. Just a quick note, GoldSeek, we turned 30 years old this last August, so we were the oldest gold news information investor website on the web. And unfortunately, right now, we just got overwhelmed with traffic, so the site is down, but it will be back up shortly. Not the best time to be dealing with a technical issue, but as you know, the prices of gold and silver are wild, and we are seeing incredible amount of traffic. I mean, really, I can tell you from the retail perspective, there was really not a lot of interest until the last 3, 4, 5 weeks, especially in the silver side, and boy, it's really exploding now with the silver price. So I'm going to talk today briefly about the new gold order, critical silver, and some of my top picks. And basically, I just kind of summarize the 2026 forecast. I think gold and silver are going to continue to their bull markets. We're going to continue to see some big moves to the upside. Gold's going to hit new higher highs. Silver will continue to go higher. Volatility will be up there, so be careful, especially now with the runs happening very aggressively. But I think the big theme this year will be gold and silver stocks. Last year, my theme was silver is going to play catch up. This year, it's going to be the gold and silver stocks playing catch up to the metal prices, which continue to rise to higher levels. Also, my year to the word of the year for 2026 is chaos, and I think we're going to have years of chaos ahead of us, and that is leading to gold. Gold is the unit of precious trust in the world, and in a world where trust is breaking down among trading partners, among superpowers, gold is the go-to place. And gold has risen to a number one position, and you see it in the central bank's holdings. Gold is now the most owned number one asset on the balance sheets. It surpassed U.S. Treasuries this last year. It's about $4.5 trillion worth of gold sitting on central banks' balance sheets. Treasuries are now about $3.9 trillion. Those are U.S. Treasuries. So we have had a big shift take place. The trends really started years ago, and now they are accelerating. So what was kind of behind this? Why are they running into gold? Why are central banks not buying dollars? Why are private investors and other people buying gold? Well, let's first talk about the weaponization of the dollar. This is something I talked about from 2022 onwards. I think now it's finally being understood what this means. The U.S. dollar was weaponized when the war in Ukraine started back in 2022. Regardless of your beliefs on what side, the outcome is pretty obvious what's happening. The US dollar was weaponized, Russian reserve assets were frozen, and it was kind of, I referred to it back in 2022 as the monetary shot heard around the world. Now this really started to accelerate timelines that were already taking place. I believe, and I still say it, we're in World War III. It's not a traditional, exactly, war on all fronts, but there's a lot of different battlefields, whether it's the proxy wars in Ukraine, whether it's in other parts of the world. But the monetary financial side is a big aspect to all of this, and gold is kind of playing a centerpiece with that. So when you do, and at the same time, another big trend that we've had the weaponization of the dollar back in 2022, and then with the new administration coming in, we've started to really accelerate this deglobalization trend, which is a big problem for the dollar because the dollar is the currency of the world, the reserve currency. So when you need to buy any goods around the world, you go to the dollar and use that. But now with deglobalization, with the reverse trend happening, you don't need the dollar as much. And of course, we have politics coming into play. We have world powers getting sick of kind of what the U.S. is doing. Some countries are fighting back, and the way they fight back is by getting rid of their dollars, their treasuries, and so on. So where do you run to out of the dollar? Are you going to run to the euro? You run to the Canadian dollar? You're going to run into the Japanese yen? No, there's really no good alternatives, and that's where gold plays its role. Gold is the premier global currency. Our former central bank chief, Alan Greenspan, mentioned that in the past. Gold, it's been, when times were good, gold was laughed at. They, called it the barbaric metal. Gold, it's something from the past where we don't need it anymore. Well, we still live in a barbaric world, and we have people who are printing money like crazy, monetizing debt. The trust in the dollar or fiat currencies, they're backed by nothing really than trust in the system. And that trust is failing, and people are really trying to find ways to diversify. the fundamental drivers of gold continue to be the same. We've have, and this is a chart on the bottom of U.S. Budget deficits. So deficits remain out of control, debt remains unmanageable, and that means that we're going to continue to see devaluation of fiat currencies. And this is going to be reflected by the gold price. Don't look at the US dollar index. That's a relative measurement of other toxic fiat currencies against the imperial US dollars. But the true reflection of the value of the dollar is reflected in precious metals, reflected in the gold price. And at this point, I have to update this. I have to keep updating this chart. But a $20 US dollar coupon, I like to call it, it's not really money, it's a currency, it's a coupon, gives you just under now 0.004 ounces of gold. And that'll continue to fall as the world continues to rush into gold. And again, one more thing is, where is, the debasement of the dollar is continuing to happen aggressively. The debt is unmanageable, and what's really difficult now is that the interest payments are going through the roof. We've had such a long period of low interest rates where we've been able to patch up past financial crises. 2008, nothing was resolved. They just continued to make the problem worse and worse. COVID happened. What do? They issued more debt. They started printing tons of money, tons of currency, and inflation started to go through the roof. And now we're in a position where we really don't have that many options. The next crisis is, what are you going to do? We can't manage it. In the U.S., we can't manage the amount of debt. So we're really at a point where it's going to get a lot more serious, especially with the world rejecting more and more the U.S. Imperial dollar, the U.S. Treasury debt, and so on. So this is a very volatile situation, and gold becomes a store of wealth, a place for protection, a place for safety. It's fulfilling its traditional role, which has done so, for so many times in the past. But despite that, the Western investor has been absent. Until recently, they're starting to notice that we have a bull market. I refer to it the last years as a stealth bull market in gold and silver taking place. Well, I think it's finally starting to get recognized that big things are happening, and people are starting to dig into the reasons behind it. You're really not finding all of those answers in the mainstream media, especially when it comes to silver. They barely even mention it. They talk about Bitcoin all day long. You saw it last year. More money flowed in the U.S. ETFs into the Bitcoin ETFs than they flew into gold ETFs. And there was actually a net outflow of the gold and silver stock ETFs. It's just unbelievable how far behind the curve the Western buyers have been. You look at the allocation to gold and to silver, it's closer to 0% than it is to 1%. Goldman Sachs did a study, and it said in private and institutional portfolios and so on, it's like 0.18%. There's such an under allocation to the gold, physical gold, and to silver that we have so much more left to keep going on this bull market. Central banks continue to buy over 1,000 tons a year. A lot of the emerging market central banks, it's just not the BRICS central banks, but in Europe where I live, Czech central banks, we're buying gold every month. Polish central banks just announced they're going to buy another 150 tons. This is global. This is a global gold rush, and it's being fed not just by central bank buying, but now we have big institutional money, private wealth. There was a billionaire out of Hong Kong who said, I'm putting a quarter of my money into gold. There's nowhere else really safe to be right now. So it's being recognized. This is the year where we're really going to see the Western buyers kick it on big time. So gold is a great hedge to all these issues. You got to look at the gold price and say, well, what does it mean? Well, it's an alarm. Things are very serious on the currency side. We're fighting a lot of different issues on the sovereign debt issue. There's so much debt out there. The currencies are at risk, and so on. So, gold is really signaling something big is happening. I got rid of my technical charts because every single time I try to update this presentation, I have to keep updating the charts. But you can really see how this bull market has developed over the last 25 plus years. When the gold price hit a bottom in early 2000s, central banks were net sellers in Europe. They were dumping their gold, and then they flipped to net buyers. And then in 2022, they really accelerated their move into the physical metal. We're over $5,000, maybe $5,100 an ounce right now. Yeah, it's starting to get a little maybe overheated in the short term and maybe in some markets, but I don't think we're anywhere near the top in the gold and silver price. We're going to see, I think this year, 6,000 plus is still on the table, maybe even higher, especially with all the chaos and geopolitical issues taking place. We are in a repricing of gold and silver. And this is a thing that happens almost like in a step function move. You're either in the market or you're just going to be watching it go up. Too many people have been asking me, when's a pullback going to happen in the last year or two? Oh, I'll wait for $2,800 gold. I'll wait for $3,000 to pull back. I'll wait till $4,000. Well, it's not happening. Every single quick pullback now, it's quick. It gets get eaten up and it goes to the next high. There's a global rush into physical gold and silver. I think at this point you're going to be lucky to see the gold price go to 4,500 to low 4,000. That would be the gift right now. My approach is to buy the smashes and pullbacks in the gold and silver market. Well, with silver, boy, that has been developing very quickly. I like to call silver the most critical, strategic, greenest precious metal. There's a confluence of demand factors that have come into place in the silver market, and really this is something that's been developing for not just a year or two. This has been happening for decades. The silver market has been depressed, suppressed. The price should have never been this cheap for so long. It was very obvious last year when the gold to silver ratio hit 100 ounces to 1. Silver is dirt cheap. Well, that last year finally started to snap back, and silver is starting to get recognized and be appreciated properly. We're basically in a bidding war. It's an auction for the physical silver supplies around the world. There isn't really per se a shortage of silver yet in the West, but you look at certain centers. London is running low on their silver inventories. China, Shanghai, low levels. You're getting a global buying of silver for various reasons, and it's turning into a bidding war. And it's happening very quickly. You're going to see a lot of volatility in this sector, so be careful. But I think silver's got a lot more upside left to it. It was easy to call $50 silver, $100 silver. Now we're kind of in the area, well, it's like, how far does this run up in the near term before we get our first serious correction? That's something I have different scenarios. I can see 125, 150, 175, $200 hit first before this thing really pulls back. But it could happen next week. We could, hit $115, $120 here next days and see this thing snap below $100. That's a pretty vicious correction. But to me, those are the buying opportunities. There is nothing that can really resolve this issue in the near term. There is just too many things coming into place at once, converging forces. We've got years and years of silver people holding silver, selling their silver. It wasn't until the last 4, 5, 6 weeks that the Western buyer turned from net seller to net buyer into silver. We've had a physical supply deficit in silver, structural supply deficit for years. This is the 6th, 7th year where we've had hundreds of millions of ounces of silver more in demand than supply. And that's been fed, that supply deficit has been fed by existing silver stocks, above ground supplies, silver ETF sellers in the West, and that's ending. That's switched. Now we're having a total different effect. You got net buying now of silver in the West, and stockpiles are getting thinner and thinner and thinner. And there's nothing you can do to really pop on, really increase the mine supply. We have about 850 million ounces of silver, ounces of mine supply coming on, plus some recycling. So you got about 1 billion ounces a year. We're running 200, maybe more million ounces a year in supply deficits. There's not a huge amount of silver stockpiled left. It's being eaten up very quickly. You can just see how it's getting a real physical squeeze. And that's the key difference right now, is that people want physical silver. They don't want paper. They want the actual physical, whether it's in China, in the U.S. and other places. COMEX, we're seeing massive amount of deliveries every day, millions of ounces of silver being withdrawn, being asked for. So this is a totally different ballgame. You don't have the paper price in control; it's a physical price. And when we have the physical market demanding this amount of silver, boy, you can get some really extreme situations where the silver price, it could easily go up to 200, 300, 400, 500. This could absolutely overshoot to the upside. So it's a difficult thing to predict in the short term how high this goes, but this is not something that's going to end in the next 3, 6, 12 months. There's a window here for silver, a couple years or more, where this is not going to get resolved. You've got governments who have now, labeled critical as a critical metal to the national defense of the country. So now that comes into play, and they need it for national security defense purposes, whether it's Tomahawk missiles or whatever missiles they're using these days. Silver is key to all aspects of a modern civilization. We use it in our phones, our cell phones, electronics, AI, for the green economy, like silver is used in so many different ways. And that's not going to be easy to get off, using silver very quickly. So you could see a little bit of demand, industrial side could go down, but at the same time, you have stockpiling, governments who are going to look at stockpiling silver. You have they pretty much weaponize silver to the point where it's becoming a critical metal to the nation state. So I'd be interested to see how this plays out over the year. You're going to get more aggressive, talk from the administrations and different countries trying to protect themselves. We have resource wars, nationalism taking place, and silver is part of this. So the West has come into the silver market. The premiums went from near zero above spot to now you have to pay $5, $10, $15 above spot to get retail silver. It's getting a little difficult to get some, the silver. One thing you should understand about the retail silver side, there's not that many mints out there. There's not that many bullion dealers. When you get a rush of people into the silver bullion side and retail side, you can't just satisfy that immediately. You can't just have mints double, triple their production. Same thing with the silver miners. They can't just double their production. It takes a lot of capital, a lot of time, and we're going to continue to see these issues develop over the year. There's going to be more and more shortages. You're going to see premiums go through the roof on physical silver, and we'll see this reflected in the price. The chart is off the hook. The gold to silver ratio is finally coming back to reality. We're back to low 40s today. I think, 2011, we saw the ratio go, to just below 40 or so. I think this bull market, we're going to see the ratio go way below that, way below 40. We're going to go probably way below 30 and way below 20. I would expect somewhere between 10 to 20 ratios, kind of where this ends, but it's kind of hard to say that because gold is just not a monetary metal, it's an industrial, it's a critical strategic metal. So there's so many different factors at play that are moving on the price here. So the theme last year I said if you want to buy gold for under $1,500 an ounce last year, buy silver. You can buy gold at equivalent of $1,000 an ounce. The ratio was near 100 to 1. This year, I think if you want to buy silver for under $50 an ounce, under $30 an ounce, you buy the silver stocks. They are so far behind. You can see here this is the HUI, shows gold and silver stocks versus the gold price. And if you were to do the SILJ versus silver price, you see the same thing. The leverage to the silver and gold stocks, it really hasn't been truly reflected. At this point, the amount of money these silver miners are making is off the charts, and Wall Street's going to start noticing it. You're going to get earnings coming into play. They're going to start buying up the silver miners like crazy. You're starting to see that now, and it's going to trickle down into the juniors and into exploration stocks. So for me, I'm actually selling some of my silver miners and buying more and more of the silver exploration and development stocks. My main position is Idaho Strategic here. I'm going to mention a few of my top positions. This is a small junior gold producer with only 15 million shares. They have some of the top strategic critical metal projects in the United States as listed by the U.S. government. Obviously, we know what's happening down there. Things are big investments and big focus on that. Black Mammoth Metals, one of the largest shareholders in this company. They have one of the largest exploration portfolios in the western United States of silver, gold, copper, critical metals. Also really tightly held, and lots of drilling coming up this year, so we'll be excited to see how those projects develop. Abra Silver and Gold, I still haven't sold a share of this company in Argentina. They have such a beautiful project, gold and silver. They keep expanding the project. There appears to be a gold porphyry underneath the open pit that they're hitting. They have the Jack deposit just showing up high-grade silver left and right. This is a mine, and this is a company that's done the hard work during the difficult times. They're ready to capitalize. I bet they're going to get taken out in the next year or so. Great acquisition target. Kootenai Silver and some gold. Kootenai, I keep buying this stock. I can't help myself. They have hundreds of millions of ounces of silver. They're probably about 3 to 4 ounces of silver per share right now. Their Columba project in Mexico, they had their maiden resource out, 54 million ounces of silver. That'll be 100 million ounces this year. They're finally getting enough cash to do the work. So you see aggressive drilling taking place. Their resources are going to keep expanding. So I love the leverage to silver with Kootenai. Hasn't really taken off. BP Silver, new silver company in Bolivia with some tier 1 silver potential for a tier 1 silver deposit. So any day we should get the first drill results out and see if this happens. But this is a new silver company I keep buying in the market. Aztec has also a nice silver project in the United States. Obviously, the United States has become very friendly on the mining front. huge support by the government. Permits are going through left and right. They're getting supported even financially by the government in certain metals, and they're really pushing things forward, and I think it's the right place to be for the next few years on the mining side. Great support. Tombstone project in southern Arizona, Aztec, they're doing really well with that one. Silver North Resources is one up here in Canada. This is a company that has a silver project right next to Hecla's mine. They had their last drill results just came out. They hit on everything. They're looking at some really nice a silver resource that's coming together there. High grade, very cheap micro cap silver stock. Love that one. Fortuna Mining's here. I've talked about it for many years. That company continues to cash up, making tons of money in the gold side. Not as much silver these days, but they have a beautiful projects around the world. Silvercorp Metals, boy, that one keeps going higher and higher, getting revalued. Silver producer in China and bringing on a gold copper project in Ecuador. Huge, strong cash position, doing really well. I'm over time here, so I have to stop there. But if you want to follow me more, you can follow me on goldseek.com, silverseek.com. On X at Goldseek, and I will be able to talk more, I guess, at the back after this presentation. So thank you for your time.